Good afternoon, everyone, and welcome back to the Commodities Wealth channel. I am your host, Troy Lerche, bringing you this week in wealth. I want to first say I hope everybody had a great weekend and have been enjoying the Olympics like myself and my family. It's been pretty exciting so far. And we want to root on Team USA in all the events. So now we'll jump right in. I want to start by we always review the CAPE indicator. The CAPE indicator went up last week, even though Monday was a very volatile down day. The rest of the week, the markets came back, and actually the CAPE indicator went up to 38.32, which was up from 37.99. We also remain in cyclical bull territory. And actually, after Monday's down day, we had one of our indicators change, but it wasn't one of our main indicators. It was just it's one of the leading indicators that changes quite a bit. It changes with the volatility. So 3 out of the 4 indicators are positive now. In the U.S. markets, they ended the week higher actually after a sharp sell-off on Monday. The advance was somewhat narrow, with much of the gains concentrated in technology and internet-related giants. The Dow Industrial Average finished up 374 points, which was a gain of 1.1%. And the NASDAQ was up 2.8%, while large caps, by market cap, we had large caps up 2%, while mid caps and small caps rose 2.1%. In international markets, Canada's TSX added 1%, while the UK's FTSE 100 rose for the first time in 4 weeks, albeit not very much. It rose 0.3%. And in Europe's mainland, France's CAC 40 and Germany's DAX gained 1.7% and 0.8% respectively. Major markets were mixed in Asia. China's Shanghai Composite added 0.3%, while Japan's Nikkei declined 1.6%. And international, to kind of classify the international markets, developed markets rose 1.1%, while emerging markets actually declined 2%. For commodities, they finished the week mixed. Gold retreated after third consecutive week of gains, declining 0.7%, while silver gave up 2.2%. Oil rebounded following an early week sell-off, and West Texas Intermediate crude rose 0.7% to 72.07 per barrel, and copper was up 1.8% for the week. In U.S. economic news, the number of Americans filing for unemployment claims jumped to a 9-week high as automakers shut down manufacturing plants to retool for the latest models, or in many cases due to chip shortages, which we've talked about many times. The biggest increase took place in Michigan, where auto workers are eligible for benefits when manufacturing plants are briefly shut down each summer to retool for the latest models. I did not know that. Kentucky and Texas, both big auto manufacturing states, also reported large increases in new claims. Confidence amongst the nation's home builders continue to wane as shortages of both raw materials and skilled workers continue to hamper construction projects. After surging higher in the second quarter, the U.S. economy cooled off a bit, according to data from analytics firm IHS Markit. Markit reported its preliminary composite output index for the U.S. fell to a 4-month low of 59.7 in July. In some international economic news, retail sales in Canada fell in May as economic restrictions to contain a third wave of COVID-19 infections continued in many parts of the country. Across the Atlantic, Britain's rapid economic recovery from the coronavirus pandemic slowed sharply in July as new wave of cases forced thousands of workers to self-isolate under new government rules. We just spoke about the Olympics. Now we'll talk about the cost of the Olympics. The cost for hosting the Olympics have only gotten higher for Japan, with what should have been an economic windfall for the country. After being awarded the Games in 2013, Tokyo projected the 2020 Olympics to cost $7.5 billion. Since then, that number has only doubled, with projections of an estimated $15.4 billion costs forecasted in December. Over the past several years, the country worked hard to invest money in buildings and improved stadiums, readying its infrastructure for the hundreds of thousands of visitors that were expected to flock to Japan to watch their countries compete. However, much of the expected economic benefit from the Tokyo Games vanished in March, when it was decided to ban foreign spectators from traveling to Japan. Now, with all the spectators banned from the Olympics, what should have been done about the economic boom for the nation will now assuredly be a bust. And finally, if you were to go back in time at the start of 2020 and predicted the stock market would be up almost 35% over a year and a half, most people would have probably believed you. After all, other than a few minor bumps in the market, the market had been solidly upward trajectory over the last few years. But then a global pandemic, a recession, and an explosion of unemployment rockets rocked markets around the world. Since 2011, US markets have sharply outperformed international markets. Would that continue when the market picked itself up and began advancing again? Many forecasters predicted that at long last, international markets, in particular, European markets, would lead the global recovery in the stock markets and finally outperform the US, except it didn't happen again. Once again, the US markets took the lead and never looked back, with a 34% advance in the S&P 500 since January 1st of 2020, which is almost 5 times better than the 7% gain in the Stock 600 European Stock Index. Well, that's all for today. Enjoy the Olympic Games and look forward to talking to you next week.